the things that pay the best are your skills. So keep buying skills. So if you want to get fit, pay for a trainer. It will fast track your results, right? If you want to get healthy, go to a nutrition. Don't try to figure out your own gut biome. Use technology. Pay for the advice. Pay for the intelligence of other people who have committed for it, because there's nothing that will pay off better than a distinction. It's not always money that will solve the problem. If you've got a great idea, money will find you. It's about really making sure that you've got strong product market fit as quickly and as cheaply as possible. And if you can show real data with real customers, you're going to get more money for less equity, faster and easier, and it'll be a natural process for you.
Hello and welcome to the Dr. Espen podcast. I'm Espen. Today we are having a conversation about how to become a highly successful entrepreneur. We're having a conversation about the investor part of the cash flow quadrant, how to move from working for money and having money work for you. And this is not just an arbitrary conversation. Today we're joined by Hudson, a highly successful entrepreneur here on the Gold Coast, and also got companies around the world, including in America. He's a serial entrepreneur that's built and sold several multi-million-dollar companies in several countries. And we just had a chat before I pressed record. He's also the founder of Reliable Education, which did over $70 million in sales in the first 5 years. He's toured all over the world on the big stages with, Grant Cardone, Tony Robbins, Gary Vaynerchuk, and the list goes on and on. And today we're going to have a deep and powerful conversation about how to become a successful entrepreneur, not just in starting a business and scaling a business, but how to understand the investor mindset and move away from the old paradigm of, as I mentioned, working for money and actually having money work for us and diversifying portfolios. We'll talk about real estate investing and many other things. So I, for one, am really excited to have this time with a highly successful and conscious entrepreneur to teach us how we can get even further ahead. So Mr. Adam Hudson, welcome to the show. How are you, mate?
Very good. Thank you for having me. I really appreciate it.
Oh, it's a pleasure. I mean, you're a thought leader in the Amazon space, in the e-commerce space, in the property investing, entrepreneurism, all the things that we've discussed. I want to just jump straight in and ask, what does it take to become a successful entrepreneur these days?
Look, that's a good question. I think it's a dash of insanity, a lot of obsession. I invest in entrepreneurs these days and back them. And I think the one thing that you can't teach is that hunger, that really deep desire and drive to just absolutely prove the world wrong and just not quit, above all else. When you read my sort of highlights reel, they really are the highlights. There's been 10x that many lowlights along the way, and it's that deep dog in you that keeps you going. It's not intelligence on my part. It's just a lot of work and persistence that's got me to where I am. I'm certainly not the smartest guy in the room.
I love that. And it's interesting you say that, because I say the same thing to my students. The recipe for success is simple in theory, which is just don't quit. Keep on going, keep on learning, keep on growing, keep on pushing. Find people that have done incredible things that you may not have achieved just yet, such as what we get the privilege of, speaking with you about today. Somewhat model the masters, but just don't quit. And I don't think it's any harder than that in theory, but of course in practice, it's a whole other story. So I just want to ask quickly about Reliable Education. This was really cool, what you did there and what you achieved. Quickly about Reliable Education, you exited from that, and a little bit about what you're focusing on now, please.
Yeah, so Reliable was something that a lot of people knew me for because it was so successful, that business. The backstory is interesting. I was living in Los Angeles for 5 years, from 2011, 2015 or 16. And while I was there, I discovered selling products on Amazon before Amazon came to Australia. And I noticed this huge trend of consumers buying in that marketplace. Over there, 50% of all e-commerce sales in America are done on one website, which is Amazon, and it's growing to that here. So if you imagine Nike, Microsoft, Apple, everybody has a website in America combined sells less than Amazon sells on its own, which is pretty amazing stat. And the fact that you can sell into that market from Australia And like literally they'll warehouse your stock. You can live on the Gold Coast, sell to Americans, get paid in US dollars, get up in the morning and check your bank account, and you haven't had to run any of the logistics. This was a powerful idea. And so I started selling on Amazon in 2011 myself. I sold on there for 4 years, and then I came back to Australia when I sold my animation business in Hollywood. And people kept asking, how did you build that Amazon business of yours? Because it was a multi-7-figure business selling in 33 countries through Amazon. And I said, I showed people that, holy crap, that's really powerful. And so I decided to create a course. And the interesting thing was the course was based on 4 years of actual real life success in doing something. And I didn't have a lot of other e-com skills. I just knew how to do that. So I created the course. It was actually on an iPhone initially. And then I started selling it for $1,500. And I thought, we'll see if people buy it. And then I learned how to sell a course. And that grew to, like you said, $70 million in sales. We used to run an annual event for our students only, so we didn't open it to the public. And the last event we did was 2,500 people at the Brisbane Convention Centre. We had John Howard come and keynote. It was just such an amazing business and changed a lot of lives. The thing about it was that it actually worked. People actually got results, and we used to give awards at those live events to our students and recognize their achievements. At that last event, we had 110 students on stage who were doing 100,000 US a month or more, which was just remarkable in sales. So they're probably netting 20 grand a month or 5 grand a week, which is pretty stunning for a course like that, because a lot of times people buy them, don't even do the course, let alone succeed. So it was one of those rare moments where these online courses actually worked and were backed by really powerful technology and a moment in time,
Beautiful. Adam, is the Amazon space still a space to go? Is that something that you still recommend people looking at? I mean, it's a huge trend. We understand how easy it is to click a button and have it sent to your door or whatever. What are your thoughts on where the e-commerce space is now in 2024 compared to where it's going, say, in the near future?
Yeah, look, there were reasons that I stepped away from that business. I think the best opportunities on Amazon in Australia were about 5 years ago when they were just starting, because you could just basically put anything up and get serious traction. There was very little competition. The problem with marketplaces is that they kind of become a race to the bottom in price, because Amazon get about 3,000 applications per day to sell on their platform from sellers. So imagine that, right? It's a huge amount of applicants inbound. So what I think the gold rush days are behind us. But what it is amazing for is testing an idea and seeing if you've got product market fit. So you can go and create a product really quickly, and you can have it in Amazon's warehouses in Sydney or Melbourne or Los Angeles or New York or anything, a few weeks later, put up the listing on Amazon. You can drive a little bit of traffic to it using their ads platform and see if you actually got product market fit really quickly, because you don't have to worry about generating Facebook ads or building a social media profile or whatever. When people go to Amazon, what's unique about it is the only reason they're there is to buy. It's not a research site, it's a shopping center. So people type slow on Amazon because they've got the credit card in one hand. So, but the problem with Amazon is that if you do have success, it's very public, because people can see that success. Because everybody's got the tools now that you can just click on that product listing, see how much money a month it makes in sales. So it's super transparent, and you don't own the customer, meaning that you don't get their email address, you don't get their mailing address, you get no connection with the customer. You just get paid your money from Amazon, and that's it. So my advice these days is good for testing, but honestly, I think in this day and age, the better opportunity is building a brand directly on Shopify or your own e-commerce platform.
Dude, I love this. Thank you so much for sharing. Brilliant. And I agree with you. I mean, it just makes sense. I love the split testing the idea and actually getting that out and getting the viability of the potential of that product in the marketplace accordingly. That makes sense. I haven't even thought of that. Okay, so let's say we have an individual, right? They're working, and maybe they're hustling. They've got one, maybe two streams of income. They realize that they're starting to make some money now. but they're also wanting to diversify their portfolio. They want to make sure that they are, having money work for them. What are some of the transitions, in terms of, for me, the process that I'm going through is hiring people that are much better than me at the things that I'm not good at, so I can step out of the business, work on it, not in it, that kind of steps. But those kind of steps. But what are some of the thoughts that you would say now to transition from being the person on the tools, so to speak, to becoming that successful entrepreneur where money works for us?
Yeah, I think the first step is to realize that you have to have your own business if you want to create wealth, unless you are a really highly paid professional, like you're a surgeon or you're a highly paid lawyer or something. For the vast majority of people, you do have to have a side hustle with hopefully a view to building a business. Because if you're not, in a job, you get paid once, that's for your time. But if you're a business owner, you get paid for your time, your risk, and any capital deployed. You're getting equity accruing to you as days go by, and you build the business. So that's the first realization. It's not sort of optional these days. Very few people will get anywhere on a job in this country with the cost of living, the tax basis that we pay.
Yeah.
It's too hard unless you start your own business. So number one, you got to really absolutely understand you got to have a job. Have a business. And then in terms of your business, I think what I always say to people, Alex Hormozi says it, is the first place that you must obsess about and pay for is in your education, because the biggest payoff you'll ever get, and I don't sell courses anymore, I'm telling you as an actual 30-year student of personal development. It starts with personal development, gets more into business education, but the things that pay the best are your skills. So keep buying skills. So if you want to get fit, pay for a trainer. It will fast track your results, right? If you want to get healthy, go to a nutrition. Don't try to figure out your own gut biome. Use technology. Pay for the advice. Pay for the intelligence of other people who have committed for it, because there's nothing that will pay off better than a distinction, than knowing something that you didn't know before. So education, once you've acquired a lot of education, you're smarter. When you start, everything you do, if you're a young person, you should be going to learn, not to earn when you first begin. So it's about getting smarter. Then when you've got a business, all of your money and obsession and focus should go back into that business. Don't worry, don't be reading books on Bitcoin, don't be reading books on real estate investment. All of that is a distraction. That's for when you've actually got a cash machine built. So you become obsessed with the business. So one of my clients, I've got two young guys down in Burleigh Heads. They sell a product called Nature. Their company's called Nature's Pharmacy. And it's basically seaweed. You can buy it all over the coast. These guys started on a credit card for $500. I think 4 years ago, they now do $1 million a month selling that. Now, where could you possibly invest that capital when a business has gone from zero to $1 million a month? There's literally nowhere you could invest it. I don't even care if you got a meme coin that goes to the moon. There's nowhere better to invest your time and money than in that. And then when that thing's cranking and going well, then you go and start investing in real estate. My business partner on our podcast, he has a company on also Burleigh MX store. They started again with nothing, and now today they do $100 million a year selling motocross parts. And so now they've built their portfolio of property, and Eric builds buildings and all sorts of stuff, but it all comes after the business.
Okay, let's get really clear. I love this because this is exactly what I've been saying. I did a presentation called Quantum Wealth Mastermind recently. We had about 200 and something in the room of our students. And I was talking about the different return on different asset classes. And I said, I'm not a financial advisor. I don't give financial advice. But I must say, you put this much into shares and stocks and bonds, you may get X return. You put this one into property, you understand the return. You put this one into precious metals versus this versus that. These are the approximate returns, give or take. What's the return on a business? What's the net value return of a business? A good one, depending on the industry, what do you say? Maybe 20 to 40% net return per year. What are your thoughts?
Well, profit margin, yeah. I think profit margin's one thing and return on capital is another. Mm-hmm. So with the e-com business, we always said to our students, 20% is a good net margin on revenue. So if you're turning over $1 million and you make 200 net, you're doing really well. And then return on capital depends on how much money you've put into the business. But you are right. You know, when you look at it for Australians listening to this, I'll save you years of work and stress. Here's how it is. Buy real estate with leverage. There's very little that will beat. The share market over the long term is great. And if you haven't got money to start with, like savings, share market's great, you know. But if you buy a piece of real estate, even like in Southport, buy a house that might be $1 million today, you put up $300,000 deposit, you borrow $700,000, you let that do its thing over 10 years, and let's say it's $2 million in 10 years, you put $300,000 of capital in, you picked up $1 million of equity, you've tripled your money in 10 years. That's the power of real estate, is that you can borrow money from the bank. And, you know, Robert Kiyosaki says it best, like, where else in the world, if you're trying to get out of the rat race, right now, how long would it take you to save $1 million in post-tax money? It'd take you a long time. But if you could save $300, the bank gives you $700 to go and play at the wealth casino. They're giving you the capital. And so there's nothing really, and Australia in particular is so unique because we have this net migration into the country, and Australians more than anywhere in the world are obsessed with real estate. And so people think real estate prices are high now. I can assure you they're not on a global basis. They're still not expensive compared to the rest of the world. So I think, you know, if you've got a country which is kind of the penthouse of the world, and you've got 7 billion people that would probably rather live in Australia than where they live, and you've got a stable economy, real laws in place here, it's a safe place to live. That's what I say to everybody: just build a business, buy real estate with conservative leverage, and wait. It's not going to get you rich quick, but it'll get you rich for sure.
I love this strategy. It's exactly what I've been doing for the last 5 years. And I love how you can actually leverage other people's money and borrow from the government, and then the amount of depreciation. And is it still true that properties in Australia go, say, double every 10 to 15 years? Is that still projected?
Yeah, pretty much. I mean, if you do a quick Google, I looked it up the other day, I think it's about 7% CAGR, compound annual growth. So going up 7% a year. The stock market does the same. I mean, the stock market has actually outperformed on that just simple basis, the real estate market, but it's much harder to get leverage in the real estate market. So it's 7% on your own capital as opposed to 7% on your own capital plus the banks. And that's where real estate is just very, very hard to beat. I made a land commercial, but that's a whole different discussion.
Yeah. They say buy land, they're not making any more of it. Makes a lot of sense. Okay, so now we've got the strategy, and I just want to emphasize here for the listeners and viewers, how cool is this? Adam is just laying out the blueprint for us. Okay, so how do you become a successful entrepreneur? We've discussed that. Once you are a successful entrepreneur, do that first. Get the business off the ground, do your market test, know that it's viable, get good mentors, educate yourself over and over again, never stop. Then you've got a successful business, and now you've got a good return on that business. That business, take the capital from that and then consider moving it into the real estate market. And of course, also then leveraging, free money. It's not free money, but it will be a lot cheaper if you can borrow from, say the banks, invest into real estate and continue to diversify that portfolio and build on that portfolio as you go. I think it's important also, I think you mentioned briefly, the amount of people that we need in this country, the amount of people that will be coming to Australia. I mean, I think we're really short on places for them to live. I mean, how difficult it is to find a decent property even in Queensland now. So what are your thoughts on demand moving forward?
Yeah, I mean, I think we are going to see more and more demand coming into the country just with net immigration into the country. And I think you and I live in Southeast Queensland, and I think Southeast Queensland just has so much to offer. And I think it's just going to be a supply and demand. I think it's going to keep growing. And then, you look around and you start to see fairly quickly that it is a great place to live. People are going to want to move here. Melbourne, they're leaving in droves at the moment. Yeah. And so, I'm just a big advocate of it. I say to people, it's not complex, when I'm working with some of my clients who are all business people, I say to them, look, I sold 2 properties last year in Burleigh Heads in March. And I bought one of them for $1.7 million. in 4 or 5 years ago, and I bought the other one for $2 million. Now, I was fortunate because I was able to buy those without leverage, so that I owned them. But I sold those 2 properties, and I've got a bunch of others, but I sold those 2 at auction, so 1.7. And the reason I'm giving you these numbers is because I want people to understand this is not a difficult path to becoming wealthy. These are 2 transactions, 1.7 and 1.95, sorry, was the other one. Now, most people listening to this could probably see a world, if they got a successful business going, that they could acquire 2 assets like that. These are not $10 million properties. They're commercial buildings at a reasonable price. I sold them both, and they pulled in $8.3 million in sales, right? In revenue on the day of auction. And so I sort of say to people, I use a compound interest calculator app here, and I just want to do this math for people listening. And I do a thing called first mortgage lending, which anyway, it pays 9%. If I just leave that money now and compound it for 10 years, you can see the math. I'm holding it up here. But basically, if I just put that money, $8.3 million, and invest it at 9% for 10 years, it turns into $19.6 million.
In 10 years?
Yeah, in 10 years. If I just do nothing, I just compound the investment. It's a managed investment out of Melbourne. I don't do anything. It's diversified. I just sit there and leave it. So 10 years later, you've got just under $20 million. And it was a building for $1.7 million in Burleigh and another one for 1.9. That's it. 2 property transactions. And they're not massive property transactions. They're things that people can sort of get. Most people know a person with a $2 million house these days. And then if you take that and I'm just giving this to, for people to, because there's so much noise out there about, how complex it is. But here's something that's interesting for you, right? So if I take that $19 million, let's say I had $19 million, right, that I got from those 2 transactions, and I leave it invested in my first mortgage lending stuff. If I take out $80,000 a month now for the rest of my life, which is $1 million a year, how long do you think the money would last? Just a guess.
Well, hang on. How much you got in there?
19 million. 19.
Oh, that's the thing. So you take out $1 million a year?
Yeah.
And the interesting thing is most people will say 19 years, but that's absolutely not the case with the compound interest. So it depends on you're getting 9%.
I'm investing it at 9% per year. Mm-hmm. So here's the answer. If I take out 80 grand a month, which is 20 grand a week, for 30 years from that point, at the end, not only will I have not run out, it'll have grown to 130 million.
And you've taken that money out. So now you're living on the investment. Now,
so the whole point here is what I'm saying is that started with 2 sheds down in Burleigh, 1.7 million and 1.9 million. That's all it took. It didn't, and that's lifetime generational wealth.
Mm-hmm. Are you taking into consideration quantitative easing, and if that continues in the way that they have been printing?
Yeah, well, that's interesting, of course. So that's why you have to be invested, because inflation is going to kill you if you're not performing at at least 10%. I feel like you're going to go backwards in the world we're living in today.
Oh, good point. I could not agree more. And thank you for talking about the strategies. And as you mentioned, if you are committed, it's not that difficult for an individual to be successful in business, have a return on that investment, as in profits, investing that into real estate and doing something similar to what you've done. Thank you for the strategies. Brilliant, my man. Now, let's talk early stage investing. At some point, the entrepreneur goes, okay, I've started the business. I'm making money. I've got people in there. It's a viable business to sell. People are interested. How do I transform from being a entrepreneur only to an entrepreneur investor? Specifically, I'm going through that now, understanding how to raise capital, putting together my pitch decks, doing my research. I'm interested in this because I think this is good. And I know you've exited a lot of successful companies. You've taken companies public. What are some of the things that you think is most valuable to know in that transition?
Yeah, so first of all, I've exited a small number and I've failed at a lot. And that's really important to know that, because as I said at the start, I'm not super smart. I've just been doing it for 30 years and I've failed a lot along the way. I interview a lot of younger people than me that are living in a different time and a different generation, and they're achieving a lot more than I did at their age. The tools available today and the platforms and all this, just it's incredible what young people today are doing, and I'm actively learning from them. But in terms of making the transition to an investor, I think the first thing is when you're considering taking on outside funding, other people's money, in my experience, you've got to really understand the gravity of that. It changes your life when you wake up in the morning with other people's money in your bank account. I'm talking if you're an ethical person, which I'm assuming everyone is, right? So one of my very good friends who's a partner in one of my businesses today, we met in Los Angeles. He was in the next cubicle to me, and he raised $14 million US for his tech startup from Silicon Valley. And he moved, and I was bootstrapping my animation company, so I was doing it off like 10 grand of money. He was doing it with 14 million in the bank. And he moved, we were both in WeWork Hollywood. He had moved across the road into his own spaces and got the gourmet copy machines and all that stuff. And I went over there and I said, Ash, how are you doing, mate? Like, what's it like having these investors and this amount of money? And he said, dude, it's the worst thing I ever did. And I was like, wow, why do you say this? He said, mate, I've got this jumbo jet loaded with fuel, and the runway in front of me is just running out at a rapid pace, and I'm trying to get this thing off the ground, and the closer the end of the runway comes, the more pressure and stress I'm feeling from my investors, who rightly so are up his backside every day, like make this thing work. And so when you don't have a lot of business experience and you take on other people's money, the risk is enormous and the stress is enormous. So I always say, read The Lean Startup by Eric Ries. And because raising money can be a real formula for problems, because it can hide massive inefficiencies, it can hide lack of product market fit for a long time. I always say to people, what you're better off trying to do is really try to figure out, do you have product market fit? And how could you find out really quickly and really inexpensively? I started a tech company, which was basically, I said, we've got Instagram audiences, people who've got massive Instagram audiences that are not monetizing. They've got 1 million followers or 5, even you've got 100,000 plus followers. What if you could say to your audience, hey, sign up for this app and I'm going to do a live every day or every week or twice a week, and you pay $20 a month, and I would go live with that audience of people on that app. I spent $750,000 of my own money launching the app. It all worked exactly like an Instagram Live, except the people on that app were paying $30 a month, and we were taking 20%, and the content creator was taking 80%. But what we realized when we launched it, which we didn't think about because we were overly confident at that time, we were crushing it with our reliable education, we were making money left and right, that influencers, when we started meeting with them, they was like, oh yeah, that's a great idea. But when it actually came down to it, they couldn't press live, and they hated lives because influencers are used to taking photos of themselves and filtering them and picking the exact one they want. But very few people can look down the barrel of a camera and just talk. And so we just really struggled. And in the end, we closed the business, and I lost $750,000 of my own money. I didn't take any outside investors because I just didn't want the grief. But I could have found out, in hindsight, I could have found that out for free if I'd actually been a lot more disciplined, and money created a real problem rather than a solution. It just made, it blinded me to the thing. So my advice with that transition is, it's not always money that will solve the problem. If you've got a great idea, money will find you. It's about really making sure that you've got strong product market fit as quickly and as cheaply as possible. And if you can show real data with real customers, you're going to get more money for less equity, faster and easier, and it'll be a natural process for you,
Beautiful. Thank you for taking our eyes off the glitter and the glamour of the money, and helping us see that it's not always the best thing to just go and raise the capital. Bootstrapping, getting clear on what you're doing, self-funding, learning. You mentioned the book. What was the name of this book, please?
The Lean Startup by Eric Ries.
The Lean Startup.
Lean Startup, yeah.
I love that. And also, understanding the risks, and, having someone, a shareholder call you and say, hey, this is our agreement. Are you meeting those KPIs. It's a different
Super
conversation,
stressful,
isn't it?
It's super stressful, and I will not take outside money now. We did for our tech startup about 3 years ago, but we were 5 years into the journey at that point. And so that was my company in the US. We took $1 million of VC, but we were well down the path by then.
But I also loved what you mentioned earlier when we chatted. You said, now also your part of your journey as an entrepreneur is now recognizing up and coming entrepreneurs, looking at what they're doing your due diligence and potentially investing in their businesses as well. What have you found to be exciting in the space at the moment that some of the businesses that you're looking at to support as well?
Yeah, look, I'm quite agnostic to the actual space. I've invested in, like down in Burleigh Heads, I invested in a retro caravan business where they make retro caravans that look like they're from the 60s, but they're brand new. So cool. I put them into one of my warehouses down there and gave them the seed funding. They repaid that money, and now I have an interest with the business. This company where I am today is an AI company here in Southport. So we put up the money to get them started. So we funded all their initial startup capital, and we get ownership in the business. So it's what I really look for is an entrepreneur with a point to prove. I think the one thing that can't be underestimated is this dog in somebody. So generally speaking, I like to get people who've got a problem that they're solving for and they're obsessed with, but they've got that little bit of something to prove in them in a healthy way. And they're usually a little bit older. So when I say a little bit older, usually in their 30s. So they're old enough to know that money's not free and you've got to work for it and it's hard. And they're young enough to still have that drive to really want to give things a crack. It's in your early 20s, it's rare to find somebody with the maturity that I would want to back at that stage. It's not that they're very smart, but they're just not directed at that so early. So it's really about the space, and really, are they solving a real problem? That's the biggest thing. Alex Hormozi has a really powerful 4-step process for determining or filter for what they will invest in at acquisition.com. The first one is, are they solving a real problem? The second one is, can the audience afford what you're selling, the solution? Number 3 is, can you reach that audience through the platforms that are available today? And number 4 is it a growing market? Because if it's not, you're going to have to be growing just to stay in zero and no growth, right? So these days, I always look at the product or service that somebody's pitching me through the lens of, how will this look on social media? Because for most things now, you've got to reach people through one of maybe 5 platforms: TikTok, Amazon, Shopify. Like there's only a handful. Social media like Instagram, Facebook ads. So I think about the product or service being pitched in those contexts, because if you can't pitch your product or service through those platforms effectively, then I can't see a way to scale the business. And I'm really only interested in businesses that can scale and have a big enough TAM, total addressable market. So sometimes people are obsessed with an idea where the TAM's really small, or it's really, really crowded and not really differentiated enough. So differentiation is a big thing as well, so people can see quickly what it is.
So this is so valuable. And again, recommending to the listeners and viewers to go back and listen to this again. Take notes as Adam is explaining the different things. Write out the strategy, set some goals, hit the ground running, make some money as an entrepreneur, continue to work on yourself, and then get into the investor side of things. I love this. Hey, Adam, you've mentioned Alex Hormozi twice. I think it's pertinent just to quickly talk about acquisition.com, because what I've seen, and from his story with his wife, on Christmas, they're working super hard. On Christmas, he gets this phone call or an email, and it's like, I need to pay this person, 20 grand or whatever it was at the time, completely emptying out his bank account, celebrating Christmas with 0. And now everyone's talking about Alex Hormozi, what he's doing. And guys, if you haven't heard of Alex Hormozi, look him up, do your research there. But particularly, I can see that, and correct me if I'm wrong, you're kind of moving in the same way from being a successful entrepreneur into that space of, acquiring businesses and doing similar things. What have you learned in that space that you think is worth talking to now? Let's say that someone's, I'm doing $5 million a year in one of my companies at the moment. I'm looking at automating that into the AI space and tech space. And I'm also interested in this space moving forward. What are your thoughts on your main takeaways from Alex, what you've learned and what it is that's part of your major focus moving forward?
Yeah, so Alex and Layla are like an incredible super couple, I think is the best way to put it. Alex is the definition of obsessed. His work ethic is beyond. He's like the David Goggins of business.
Cool. Yeah.
He is hardcore, man. Like, that guy works 7 days a week. His only life is the gym and his work. Now,
hopefully his wife.
Yeah, and his wife. Well, they're in it together, So at his stage of life, I think there's nothing wrong with that at all. I mean, and who am I to judge anyway? So he's super obsessed, and if you want to be super obsessed like that, then great. That's Alex. I'm not as obsessed as Alex. I'm 50, so I'm different, little bit of a different age bracket, slightly different priorities. But what I have learned from Alex is, just the power of hard work and obsession. Like, Grant Cardone's the same. He's still obsessed and still works 100 hours a week. Like, the guy does not stop, and he's in his mid to late 60s. So what I learned from that is being really obsessed. And Alex's superpower is that he actually has built real businesses. He's built them himself from the ground up. He sold Gym Launch for $45 million US. He's done real stuff. And a lot of times people want to jump forward, and they forget the frame, right? The frame matters. Mm-hmm. Like, people listen to Alex not because he wears a wife beater or a nose strip, but because he's actually got the runs on the board. Like, in Australia, you look at Simon Beard, you can't fake a Culture Kings. He and Tani built a really successful business. They worked their tails off, and they did something real. So the first step in that whole world is becoming obsessed with your business and being really pragmatic about what you're doing and putting real runs on the board. And then what makes, I think, you a great investor then is that you can really quickly see what it takes. Like, here at in this business where I am today, that we've got a young entrepreneur that's doing a great job here. Where I add value is I get him focused on the things that matters. I work with him to help him really get the products crystal clear so that the marketplace understands what he does. And then we put the financial disciplines in place. Like, every day I've got him looking in the bank account. So it's and before me saying that wasn't an obvious thing to do. I'm like, the most important in this business person in this business outside of you is your bookkeeper. Mm-hmm. And I got him my bookkeeper, and she comes in here once or twice a week and sits down and says, "How am I doing, Lizzie?" And Lizzie will go through every line item of expense and income. Yeah. And so we obsess over where the money is, where the money's going, who owes us money, and looking in the bank account every day, just that financial rigor in the business. And that comes from actually building businesses and also failing in businesses and being having lost $750,000 going, okay, now that I've lost that one stings, but it gives you such powerful lessons that are deeply embedded in the way I approach business now because of the losses as well. So I think, to answer the question in a short way, the best teachers and the best investors are the ones that actually have been in business or around it for a long time and really understand that businesses are there to achieve an outcome. They're to make profit and return for the shareholders, and that's what I look for. Things that are capable of doing that, and people have the maturity and the disciplines and the rigor to achieve that. And I don't get too caught up in people's grandiose mission statements, because the old saying, no more fiction has been written anywhere than in an Excel spreadsheet.
True. Yeah. Oh, I love it. Hey, outside of your success as an entrepreneur, making the world a better place by building and scaling excellent businesses, what are some of your loves? What do you love to do here on the gorgeous Gold Coast?
Well, my wife and I have a charity that we run out of our family office called loveheart.org. And I started this work 7 years ago. And we've been taking groups of people to Indonesia, and we charge $2,000, 100% of which goes to the charity, and that we put 20 people on a bus, and that $40,000 pays for a blind tour. So we partnered with the John Fawcett Foundation, which was founded by an Aussie, and about 3,000 people come down to where we go. And they come down to the village. We do free eyesight inspections for them. That results in about 200 to 300 blind people being cured during the week. We take 2 mobile hospitals out there, which are sort of vet trucks. We bought one of those. They're about $250,000 that we paid for ourselves, and we through Reliable and with our community. And so we take people over there in groups, and we've done, I don't know, thousands of eye surgeries for about $80. You can cure a blind person for life and liberate them and their carer, because they've got usually 2 carers in shifts. So, I genuinely love that. That's one of the few things in life that brings me genuine joy outside of business. Obviously health, relationship and that, and then just enjoying the Gold Coast. It's a beautiful place to live,
That's beautiful. You know what I love? A friend of mine says that the best way to become a philanthropist and make the world a better place is to be a successful entrepreneur. Because when you are a successful entrepreneur, you have more to give. And then you have the entrepreneurs that are making money for themselves first and only, and then you have the entrepreneurs that are making money for themselves and for their families first, and then to make the world a better place after. So just want to acknowledge you for sharing that. I think that's really beautiful. And at some point we're going to leave this planet, and the question is, what have we left behind? And I can see that you've already established some amazing things, by the time you got to your 50s. That's really beautiful, man. We did the same thing in Indonesia. We actually went to Lombok. I took my son. I've got a 6-year-old son. I flew him over. I took 3 of my staff members, and we went to 3 orphanages in Lombok, and we purchased 85 beds because the kids were sleeping on the floor, on the tiles. Hundreds of kilos of rice and toothpaste and all those things, and made a big difference. And I was a bit selfish in the process too, because I wanted my 6-year-old, who was 5 at the time, to actually see that these 80 plus children did not have a bed, did not have a mum, did not have a dad. And he couldn't get his head around it. He was like, what do you mean they don't have a bed? And I said, no, they sleep on the tiles. And so we took pictures, and then I remember coming back to the Gold Coast, and then he walked into his bed and he's like, look at my bed, this is my bed. And he actually realized the power and the beauty of having a bed because he saw the opposite. So it's just a beautiful thing to do, to be able to take some of that, wealth that we've created and give it. I mean, curing the blind, bro, with all due respect, but have you looked in the mirror? Like, that's a freaking powerful thing to do.
Yeah, it really is. Thank you. Yeah, it's very rewarding. Yeah, it's been an amazing journey, that one. It's a beautiful thing. We do a bit of interest-free lending to entrepreneurs in third world countries as well through Kiva, kiva.org. We've done about 18,000 loans over the last 7 years. So that's been good as well. So, yeah, it's good. That work really is fulfilling, and the payoff is just so far-reaching. And you're right, taking kids up there, we've taken so many kids, and they come home, they've got a whole new appreciation for life in Australia. It's a beautiful place to live.
I always say, when you find yourself thinking, go to a developing country, spend a week with the ones that don't have food and water and shelter, and come back and tell me how much your life sucks on the Gold Coast or anywhere in Australia, for that matter. This is interesting. You mentioned the ROI on this. I assume you talk about the mental, the emotional, the spiritual aspect of giving. As the contribution concept is what I call it. As a philanthropist, giving, and how inspired you get when you see those people that have not been able to see. I can see you, Mom. I can see you, Dad. And also, on that note, I read an article recently. Supposedly, for every $1 invested in philanthropy, because of what it does to the psychology, they're expecting a $1.6 return. So it's as if you go and invest your money into charities that you believe in, and because of that drive, because of that spirit, because of that mindset, because of what it does for people, they expect a $1 to go to 1.6. So I haven't validated that, but it just makes sense to me that when you have and you share and you give, you get more by the law of compensation, but also because of the inspiration that comes from having the resources to make the world a better place.
Oh, look, it's huge. I've been an advocate for it for a while. I call it positive capitalism. But at Reliable Education, we the last event that we did there, which was at the convention centre, we raised $180,000 from the audience during the weekend towards trying to pay for that mobile eye surgery clinic, or $160,000, something like that. And the target was $250,000. And so Joe and I, my business partner, got on stage. And at the end, we just adjusted the check up to the $250. But what it did for the community, the audience was just like, oh my God, like what an amazing experience to see. But we also did sales that weekend, and we did record sales. I think we did $4.5 million in sales that weekend at the event, on top of the $250,000 that we raised for charity. So it just kind of makes people and really feel part of something special where people are genuinely caring and genuinely, giving, and it opens people's hearts. And I believe that there definitely is a payoff, because people do trust the business more, and they go, these are ethical people that you're dealing with. They care about people, So it's not why you do it, but it definitely feeds into that sort of concept of tithing and of giving and putting other people in as part of your picture.
Good on you, bro. I've got one last question for you, straight off the cuff, if I may.
Sure.
All right. So I want you to imagine, Adam Hudson, you are on the world stage.
Yeah.
You got every sentient being alive, watching, tuning in, listening to your message to the world. Whenever you're ready, take a breath and do share. What is your message to the world right now?
Oh, wow. I think pause and count your blessings, because no matter where you are, if you stop and do that, you'll feel a lot better. Just go back to the basics. So many people out there that are struggling with mental health and struggling with finding happiness and joy, but it's so simple. And it took me the longest time to learn this, that if you stop and truly count your blessings, like, am I alive? Am I feeling well? Do I have 5 fingers and 5 toes? The real basics. You realize a lot of people can't say yes to those questions. And so that will help you immediately and for nothing.
Oh, I love it. Straight back to the gratitude, mate. Thank you for taking it home, bringing it home at the end. Adam Hudson, where do people go to learn more about your work and to follow your journey? I know I, for one, would love to stay up to date with what you're up to.
Probably Instagram's the first place, so Adam Hudson Official, or you can check out our website at unemployable.com.au. And come and see what we're doing over there as well.
Absolutely. Hey, blessings on your journey, brother. This has been an incredible conversation. When the interview comes out, I'll be listening to it over and over again, and I know that many of our listeners and viewers will as well. Thank you for taking your time out. I know your time is extremely valuable, and I mean literally, so we really appreciate you coaching and teaching us and providing us with some tools to go to the next level, buddy.
My absolute pleasure. Thanks for having me.
Adam Hudson, everybody.